Welcome back to the watch list. Time for Technical Tuesday and some stocks trends to watch. Kevin Horner's with us, Senior Manager, Trading Services Education at Charles Schwab. And we always kick it off here with the S&P 500, the levels to watch. Clearly, yesterday, a lot of excitement as we saw new highs once again. And it's not uncommon because we've been seeing a lot of them. What say you about the current levels that we are bouncing around here?
Well, you're absolutely right. We had that lovely little consolidation following the FOMC announcement, the 50 basis point cut back on the 18th of September. And after that brief consolidation in the S&P, we've seen a nice push higher over the last week, moving really clearly through 5,800, made that new intraday high just yesterday at 58.59, just shy of 58.60. And today we're getting a little bit of weakness, probably tracking lower on the semiconductors pulling back, but the level to which we've fallen today is pretty notable. It happens to coincide with basically the gap move we made from last Friday into yesterday's open. So we've basically filled that gap. What we want to see is, if we're looking for immediate continued strength, we'd like to see this ledge that we fall into today on the short-term side held. Obviously, we can give back down to the 20-day moving average at around 57.40 and still be okay in any trend trade scenario on the S&P 500, Nicole. But, initially here, probably for short-term traders who have maybe been long over the last week plus, I could surely see some of them maybe tightening up some stops, utilizing today's lows for a reason to take a little bit of profit. If we violate that, might imply that we make that deeper pullback, which could be somewhere in the neighborhood of, say, maybe 60 to 80 points down to that 20-day moving average potentially. So that's kind of what I'm keeping an eye on here initially.
Yeah, without a doubt. And we watched the volatility. We've seen the recent breakout, 58.71 being the most recent high. So a lot to watch here, particularly as we go into the elections and all that. Let's take a look here at Best Buy, a name you're watching. PC sales have been doing better over 6 months. This is the winner, up about 30%. Now what? What are you watching here?
Well, it was looking really strong this morning. Now we've given back a little bit here in the midday portion, but hoping we were able to get through that 20-day. This was looking like a nice opportunity. What is notable about most recently here is the gap level that we've made, the gap ledge that has been maintained, really trading in about an 8-point range here following that most recent earnings report. And that 8-point range at this point means, now that we've pulled back a little on today's action, maybe a trader who's looking for a continuation of the uptrend here could be a buyer in this area, because you're looking at a trend that is apt to hold that $95 area of support. It was really nicely tested with yesterday's lows. And if we can just maintain that level going forward, we're going to quickly see the 50-day moving average in purple on this chart getting caught up to that $95 level. So it could be stated here that a short-term trader has good risk versus reward for entry as long as the 50-day moving average is maintained by price action in Best Buy. And then that still allows the trader just to target the upper portion of this range around 103. Where this gets to be really opportunistic, though, Nicole, is a close over 103, which could then the trader could then take the height of this range we are in, 8 points, and add that to the 103 level for an approximation of an upside move over what could be the next 6 to 8 weeks potentially. And that gives an area of about 110 to 111, which obviously for entry near 98 sounds fantastic if it can be achieved. But obviously, everything has to play out favorably for us. So as usual, Nicole, traders need to have their exit strategies both below the market price and above it so that they know what they're up to should things play out.
I saw a couple of buy ratings, too. I mean, Guggenheim had the buy rating, but it went down to $90. The stock is at $97. So I always find that a little disconcerting when they have a price target that is at or below the current price target.
Yeah.
But they did bring it down from 110. A different one was D.A. Davidson. Now, they also have a buy rating, but D.A. Davidson maintained the Best Buy at $117 price target, much better than the 97, 95 where we are today. So that, by the way, was today, folks. So that's one of the calls to watch. Then we have D.R. Horton. What's going on in the housing world as everybody's watching rates, right? D.R. Horton on your radar?
Yep. Yeah, you're absolutely right. In fact, as you just said, it's never as much fun when you get an adjustment or a price target that's beneath the current price level. But that's actually what happened on DR Horton today. They got upgraded at Wedbush today, and their new price target from Wedbush came in around 165, up from their 130 level. And here we got the stock trading above a really sound area of support around 182 or so. Stock is up 30% year to date, better than 19% just in the last 3 months alone. So you've seen a really nice trajectory here. Now, today's price action is notable because we're breaking that downtrend line off the peak. It's an aggressive entry spot for a new trader to deploy funds to a position like this, but it could be the beginning of something bigger. Obviously, that last high calls out. It's just shy of $200 a share. So from here, that could mean maybe 10 points of upside. And maybe if you're utilizing that 182 downside target, that's about 8 points of risk. It's not ideal from a risk versus reward standpoint unless we trade through that upside target at 200 and we start talking about the potential to take maybe a 15 to 18, maybe even a 20-point move over 200, which would just basically be the range we've traded within. So a common trader approach is to just utilize the range we have been in. And if broken to the upside, just add the value of that range to the upside, like we just discussed with Best Buy, for example. So it does give the opportunity there, perhaps, but it might be a layered entrance approach, Nicole, where maybe a trader starts small today and then wants to see things continuing, maybe trading through that 200 level before adding further, where things get a little bit more clear on the upside.
Yeah. Barron's had a feature piece on Edgar Wackenheim, who is a big investor in home builders, as a matter of fact, a really large position, and just saying that lower rates would merely be an icing on the cake and that the home builders themselves are the cake. And while they've already run up, there's still upside potential only because of one thing, and that is there are just not enough homes. So speaking positively about the group and saying the builders will continue to surge. He's a value investor. That was on Barron's.com. So thank you for all of that, Kevin Horner, Senior Manager, Trading Services Education Trading Services, Charles Schwab. Thank you so much for being with us.